Welcome back, everyone. My name's Carter, owner of CB Home Solutions, and chances are, if you're watching this video, we probably presented you with what we like to call a terms offer. Now, it's not an easy to understand concept, so I want to try and simplify it within this video because it might be the best way to sell the property that you own. It is not necessarily the normal process, but it's done on a daily basis all across the United States. It's 100% legal, and I'm going to explain it in a way that's easy to grasp, easy to understand, so you can either qualify it or disqualify it as an option. So without further ado, I'm going to share my screen and then we can go through this. This is an uncut video, and if you have questions, please reach out, call us, email us, text us, whatever's easiest for you. But let's present my screen. Okay, so I have a notes tab. I just want to make sure that you guys can see all this. Perfect. And my head is blocking a little bit of it, so I will scroll up and scroll down, sorry, as needed. Perfect. So a terms offer. Obviously, when we came out and we presented you with multiple different offer options, the first being cash, the second being partner, the third being a terms offer, and then the fourth being if you decided to list it in the market with a realtor. Let's say our terms offer was on the third tier of price points, 3 out of 4. So it was a higher than the other two options before it, but still a little bit less than if you were to list it in the market. How I always explain it, and what I probably reference to you is the reference similar to if you've ever bought a car, down payment, monthly payment sort of thing. Now, let's break this down in an easy to grasp, easy to understand concept. So if throughout any time in your life you've ever bought, financed, or purchased a vehicle other than going the cash route, because obviously that's pretty self-explanatory, this is generally speaking the route that you will go. So you probably know already how to sell a house on a terms option, or how to purchase a property on a terms option. But let's say this is you. Here's the car dealership. We'll make it simple. Step number 1, when any of us go out and buy a car, the first thing we are normally asked is, are we going to be financing this purchase, or are we going to be buying in cash? That's what the dealerships ask us. Are you going to be obtaining financing, so on and so forth? Do we need to get you pre-approved? That's generally what they say. Then we have to calculate in our own minds, okay, do we have money to put down? Do we not have money to put down? If we do have money, how much are we going to put down? And the salesman, more times than not, leaves it up to us, because what that down payment then reflects is the amount of money that we're going to be paying monthly as a payment. So as you can probably kind of figure this out as I'm walking you through it. I apologize about that. I'm going to mute my phone. Sorry, we're not perfect here. But your down payment reflects your monthly payment. And then they will also ask you, Mr. or Mrs. Car Buyer, do you want to finance this over 3, 5, 7, probably soon to be 10 years? And that is what the loan you will get will be based upon. That's what your monthly payments are going to be based upon. That is how you are going to purchase your car. Now, if we take this same concept and we break it down and we relate it back to houses, which I'm going to show you in just a minute, I'm going to give you a real life example. It is absolutely no different. It is 100% legal. It's all documented. It's all recorded. Attorneys can draft it up. We pay to have that done. It's very simple and very easy. Step number 2. So now that we've established a timeline, a down payment, and a monthly payment, we can start getting everything set to buy the car or buy the house. Like we're using the words interchangeably right now. Now let's say we're doing this. You can enjoy my drawings. We're buying a $20,000 car. We're paying $3,000 down, and that results in a $400 a month payment. So technically speaking, the loan is for $17,000, which is $20,000 minus $3,000, $17,000, and we're going to pay $400 a month on that $17,000 until it's paid off, or until we trade it in, or until we sell it, or do whatever. Whether that's 3 years, 5 years, 10 years, whatever the case might be. This is our terms purchase agreement. We agree to a term for a specific purchase price with a specific down payment and a specific monthly payment until the house is paid off. But I know you guys have some questions in mind, and I'll address those in just a second. I promise you on this. I will address those in a second. But let's show how it's done with houses. Let's say, for example, not that you want to buy, but let's say you're asking $90,000 for your house. It's a 2-bed, 1-bath ranch in Oshkosh, Wisconsin, just because that's where we're based out of. It doesn't matter where the property is. I'm just giving you an example. But your house, you're asking $90,000. On our initial walkthrough, which you probably already went through this process if you're watching this, we came in, we provide you multiple different offer options as we normally do. Our cash option was $76,844. The partner offer option was $83,650. And our terms offer was $90,000, exactly what you were asking for. How do we back into this number? Like we just went through the car purchase example. How are we going to purchase your home in this same manner? And let's say you pick this option. Like obviously that's what you were asking for initially. So then our conversation around terms begins. And terms is just kind of the structure. That's what that ultimately means. It's a very short and easy to understand word, but that is the structure of how we will purchase it. In this scenario, let's say that as a homeowner, you want to sell your house for $90,000. My phone just keeps ringing this morning. I apologize about this, you guys. But you really just need $5,000 right now. Now, that might not be the case, but we'll say in this example, that's the case. You want $5,000. You don't necessarily need the money, but you need $5,000 to go and buy a really nice motorcycle or a boat or something, a camper. You can't get a ton for $5,000 right now, but let's say you want $5,000. Okay, so our money down is $5,000. The purchase price is $90,000. Let's say, and I'm just making up numbers here, or I made up numbers, and I apologize for the poor handwriting. I had to do this all on the computer mouse. Let's say we agree to pay you $600 for 4 years in a row. Every single month you get $600 for 4 years straight, 48 months. And you're probably wondering, Carter, $600 for 4 years doesn't equate to $85,000, which is the price minus the down payment. That just doesn't work out. Where does the other money come in? So we were able to give you the price you wanted, the down payment you needed. Now we can discuss monthly payments and a time frame. Again, these are all, I like to say, negotiable terms. You tell me what you're wanting. We'll tell you what we're wanting. Then we hopefully can meet somewhere in the middle. But we have to have this conversation. But it's easier to have once you understand the concept and the process. So like I just said, $600 a month for 48 months, 4 years doesn't add up to the remaining $85,000, which is 100% correct. It's not even close to $85,000. In fact, it's only $28,800. So what happens with this $56,200 that you're owed? So at the end of the 4 years, we still owe you that money. This is recorded. Like I said, we cannot possibly sell the property, refinance the property, do anything like that without paying you off this amount. It is 100% illegal. We can't even do it. The title companies wouldn't do it for us. The attorneys wouldn't do it for us. It's impossible not to pay you the money that you are owed. So the payment is legally, like I'm going to use legal terminology because that's what anyone will use when they're explaining this. The payment is referred to at the end of the 4 years. This $56,200 is a balloon payment, probably because the loan balloons at that time, whatever that means. Don't ask me why. Like I had mentioned, I don't know why this is referred to as a balloon payment. Probably because it's coming to the end, the loan pops, the money's due. Like, congratulations, you owe $56,200. That is the whole understanding of it. So this is essentially, the terms offer explained. So the money, you get the larger lump sum at the end than you would up front. Normally the down payments in the beginning are a little bit smaller. but it is, again, negotiable. If you want $0 down, your monthly payment's probably higher. Your purchase price could be higher. Your term might be shorter or longer, depending upon the scenario. Everything is just a conversation to be had, and we try and cater it to your exact needs, wants, desires, if this is an option that you're interested in. Now, why would we want to do something like this? Or what is our motivation behind doing this? Like, you understand the cash offer option. We just buy it, remodel it. We might keep it as a rental. We might resell it. That's very simple. You understand the listing part. Why would any owner want to do this? Why would we want to do this? Because our thought pattern is, when we purchase homes like this, we have, generally speaking, years to turn them around. Whether we keep them as a rental, whether we take a long time remodeling them, we owe you that money on a monthly basis. And then from our standpoint, normally our hope is values always tend to go up. Like, if you look at the history of real estate, values tend to go up. And we plan on repositioning, so remodeling, and then either renting or reselling the property within that amount of time to either pay you off or profit on it in some way, shape, or form. That is our grand plan. Does it always work out? Of course not. There could be things, but that doesn't mean that you don't get the money that was legally agreed upon. Because again, this is a legal agreement. It's no different than your mortgage, if you ever had one, that you owed to the bank. You got an illegal agreement there. If you don't pay, you don't stay. They foreclose on you. They take the house back, so on and so forth. It is no different here. Everything's recorded. Your contractual interest is protected. And that's where it kind of goes into here. Is this legitimate? Here's how you're protected. The interest is secured against the title of the property, meaning that we could never sell it or transfer ownership without you being paid off in full. That's the catch that most owners are afraid of. You're also listed on the homeowner's insurance policy as additionally insured. Say the house burnt down in a worst case scenario. We have insurance coverage that covers $200,000 on a $100,000 house, we'll say. With that, your loan would be paid off. You would have to sign off on the insurance claim, the insurance proceeds. You would get paid off. We would collect our money that we're owed. Happy. You get the money that you're owed in every single scenario. Besides the scenario, if for whatever reason payments were not made on our side, on your side, whatever the case was, if the owner, for whatever reason, or the buyer, for whatever reason, doesn't make their payments, you legally can take back the property through the foreclosure process within 30 days. That's how we structure our agreements. There's not a bunch of legal fees, legal loopholes, legal jargon, everything like that. You will get the property back right away. Generally speaking, it's in better condition because we've started the remodel process. Might even have a tenant in there. It might be more profitable for you to take the property back than having us fulfill the duty or obligation in it. Now, I know you don't want to do that. That's like the worst case scenario. We have never defaulted on a loan. We've been doing this since 2015. Never defaulted on a loan, never missed a payment, never done anything like that. So our track record speaks for itself. We've helped 130 plus owners at the time of this recording. And we have a very strong track record to protect our reputation and to let owners know that we are serious. We're in this business to purchase property. So sorry, I know my camera was probably covering that. But that is, in the grand scheme of things, the terms offer explained. You could have more questions. I'm going to stop my screen share. Let's see, stop sharing. You could have questions. You could have additional questions. You're wondering about things. If that is the case, please reach out. I want to facilitate a conversation. I can explain it in more in-depth detail. I can show you the legal documents if you would like me to. And we can structure something so it's a win for you. It's a win for us. It makes complete sense. Or if it's easier, you can go the cash offer route or the partnered offer route, or listing it on the market with a realtor, whichever one of those that you prefer. But in all of our sales, even the terms offer sale, it's an as-is sale. There's no closing costs that you pay. We assume all responsibility on our side. So please let me know if you have questions. I look forward to having a conversation with you soon, and I wish you the best of luck.